Hi, I'm Bert Nussbaumer from macrobit.co.uk. Well, a busy week in terms of news, but not such a busy week in terms of market volatility, unless you're an equity trader, obviously, where we just seem to make new highs every day. And I start to wonder if there's any sell buttons left on the platforms. But anyway, we had obviously the big, long-awaited signing of the Phase 1 trade deal between the US and China. This was obviously, expected, pretty much priced in. We did really get what we sort of expected in terms of the details of it. And the interesting part is just that in the news wires, ever since the signing of the trade deal, we seem to have a 2-to-1 split in terms of negative press out of the deal, which I'm not sure I fully subscribe, at least not in the short term. I think the market has actually whether reacted in a buy rumor sell the fact, nor in a buy rumor buy the fact. And that's just sort of continues as business as normal. And I think the importance, I think we talked about this before, it is just a truce. It creates stability. Phase 2 will not be negotiated until after the US election, which means if either side, if not one side suddenly feels the other one is not actually acting up on the agreement, then we should really not have any flip-flops in US-China relation up to the US election, which is something the market will love in terms of stability. What I would like to quickly look into is now the data. As the data now starts to matter a lot more, the first slide we look at is going to be the Philly Fed. The reason I wanted to show this one, that was out yesterday, very strong increase. We see the correlation usually with the other indicators is not that bad. So the big question here is whether all the other indices are actually going to be bouncing back as well, and that some of the strength of certain data we see is actually a true recovery and not just sort of late cycle recovery, but actually maybe the result of the 75 basis point cut the Fed has done in 2019. On the next chart, similar stuff. We have the ISM versus Empire. Here, obviously, we have quite a bit of a dislocation of late. We have a big bounce in the Empire versus the ISM still trending lower. Now, of course, we can always argue maybe it's a blue line that is coming down and the black one is the right one. But in terms of other data sets that we have, it really does look like as if we have some recovery in the US economy. Some of these indicators might actually bounce back, which continues to look pretty good, especially now with having the trade deal under the belt and more stability in the market and more confidence, which is probably the real key. On the next slide, we have Chinese GDP. We had that out last night. Obviously, the chart doesn't look like that constructive. The weakest growing, I think, 29 years, whatever. But reality is that the other components like industrial production had a strong increase, strong retail sales. And really, we were worried that GDP could actually print below 6%. So to get a 6.1, even though it doesn't look great in comparison in history, it is probably the market is quite happy with that. And we've seen the Aussie rally, the closest correlation to China. We've seen risk generally responding quite well on the Chinese data. So that is what I mean. The market might give all these potential green shoots the benefit of the doubt, hence why risk is really big. The last chart, I just want to show it like this. It's a Dow monthly. I've been wrong for a while now in equities expecting this to turn down, and it just doesn't, which, we really have nothing to lean on. The sort of little channel I drew in there, it's just that was the acceleration point. So should we break back below 28,000, 27,500, that would be probably the sign when it gets a little bit tricky. But other than that, it just seems nothing is going to irritate equities right now. In that sense, for next week, I think it's a little bit more of the same. Is the market continue to push risk higher or not? There's definitely nothing on the agenda that would worry us. And from that side, it just seems more stable market for the time being with probably little FX volatility, I'm afraid. Thanks very much indeed. Have a lovely weekend. Bert Nussbaumer, macrobit.co.uk. Bye-bye.